All right, we had, of course, a deep retraction yesterday, so we have had to update all the longer term and intermediate term charts to check the momentum. We're having good positive continuation momentum on the daily and positive continuation momentum on the 4 hours. The labels are showing here very clearly. We have a 3, we have a 4A, 4B, and 4C that break out into a leg dot 5, high degree dot 5, but that dot 5 is going to be doing the 1 and a 2 in bracket. It did a 3, and it's presumably doing a 4 because we got spikes into negative momentum on the 4 hours. So this 4 in a trending market shouldn't fall back all the way to level 1. After doing that 4, we're going to be doing a 5. But level 1 is possible to correct to the low boundary of this channel, trending channel, and it takes us all the way to $80 or $78 thousand, of course, $78,000, $80,000. Unlikely, and therefore we believe we are still moving higher into this tight channel or into an ending diagonal that will create the head at 110,000. Assuming, of course, the momentum is supportive of this, and we believe the momentum is supportive. We're looking at today's 4 hours, and today's 4 hours is showing these very small spikes in negative momentum, these very small spikes in very small slits in negative momentum. Mean we're seeing a triangular structure, and it appears we are seeing an ascending triangle, which has the latitude maybe at some point to break out into an ending diagonal. We're looking at the channel, high degree channel, which is holding price here on the daily, and this is the internal channel currently driving leg 3 higher. We're of course close to the low boundary of that accelerating channel and at the top of the boundary of the high degree channel. Let's take a look at the labels first. We have a 1 and a 2 in bracket. We have a dot 1, dot 2, dot 3, dot 4. We had a 5. We have finished 3 in brackets. We're doing 4. And that's definitely because we have a bit of negative momentum showing here on the 4 hours. Let's take a look at this. So that 4C must be an A and a B and an ABC. This is the standard anyway. The standard segregation or the standard proportions. All right, so but it's always stuck at 78.6. It's above the 200-point moving average. It is looking really like an ascending triangle with twice attempts to break out, and therefore the latitude is to break out. It appears that we've done the updates, and now we're quite sure that dot 5 is here. So we had the dot 3, we had the dot 4A, we had the 1 and 2, 3, 4, and 5, dot 5. There's been a leg A, there's been a leg B. We're now doing really a 1, 2, 3 into A. We're going to be doing that B, and then we're still going to do that C. Okay, so if we have longs, a bounce higher would mean we can take out our longs, stand out, buy into leg C, and wait for the breakout into wave 5 in brackets. 116 can be seen, 109, 107. All those targets are showing up here. All this is just a shoulder level. That's why it's taking a lot of workout. The current ascending triangle is really either a fraction of this ascending triangle in 1 and 2. That's why we have a similar ascending triangle in a higher degree 3 and 4. Or it is all one structure that is not yet clear, but possibly doing an ending diagonal, a very flat ending diagonal that will do a top out, and that shoulder becomes a head with a double head before the market retracts slowly. Take it to the 2 hours. We have again very muted negative momentum. The labels here show more clearly. We've done A, we've done B, we have done leg A into C. This is what we're trading right now, and then we get really some kind of a deeper C that will support on top of that upper boundary of the ascending triangle, and then move higher. Takes us to trade management. Of course, inside of a triangular configuration, you want to buy negative momentum. So the momentum that you're seeing here is really a buy, even if it's an A, and even if we believe we're still getting a C. Some of us may already have longs. We're looking at longs at 100,000 or 99,800. There was a hedge here at 98,000, so we should be in the money. On a bounce higher, we should close out the longs and hold, close out the shorts, hold the longs. Try to take them out at 100,200, for instance. Wait for leg C. Buy again the lower boundary of this ascending triangle. Buy again slightly, of course, below the lower boundary of the ascending channel, and that would be the end of the move. This is what bounces higher to 107. That let's see. You can go over the labels. So far we keep adding as the market unfolds, and as the momentum plot is not showing the breakout yet, but it's showing a high degree correction ended, which is an A or a C. But here we think it's an A, even a C. It is possible, of course, that it is finished, that it is something like an A, B, and a C, and the low correction, we have it like 4, and we move higher into like 5. But in order to take that kind of confirmation, you need to see very good positive momentum on the hourly time frames, or on the 30 minutes or 45 minutes. And we don't really see this, so let's take it back to 2 hours. You're seeing a bit of negative now momentum on the 2 hours. So must be another leg down. Right. So take it now to 15 minutes. This is what we're really trading. I believe we're finished A. We're going to be doing B. B is going to attack the upper boundary of this triangle, ascending triangle. We go out of the long that we're holding. We can go as high again as 100,200. Resistance 1, resistance 2 in between. Close out in leg B. Wait for retraction in leg C. Buy market again. Take it to 106. All right. Of course, the very nature of the current structure means you have to trade very tight internals, and the tight internal here is showing an ascending triangle. That is probably an A, B, and a C, 5 swing C into B. So we seem to have done a 1, we seem to have done a 2A, 2B, 2C, and we're going to break out higher. So what we really need to focus our segregation on is bottom out of leg A. We're going to mark it and move higher into leg B. Let's take this now immediately to 5 minutes. And over here, it would seem the market has ended at that C, and we get the same ending diagonal rise that we're seeing on Ethereum and even on Ripple. We get on, so we believe this is a 1, we get a 2A, 2B, and 2C. All right. And then we get the bucket to move higher. Should we do the long if we are not in the market? If you are not going to long Ethereum and you wish to long Bitcoin, of course, we can do the long, but the target is only 100,000. I believe by the time we get engaged, it's going to be probably maybe 100,500. By the time we get engaged, it is going to be 98,000. It already is, of course. 98,000. It means if we break this neckline on positive momentum, we long. This neckline is 98,300. We're really seeing something like a triangular composition. Better, of course, and this is a 1 and a 2. Break out higher into 3 on positive momentum on the 5 and 15 minutes. Good positive momentum is a long. And it would mean that there's still no positive momentum on the 15. If you really get breakout like the last time, it's a long, and this is the structure I'm trading. A 1 and a 2, probably just an ending diagonal. 3, 4, and a 5. Maybe we still get more retractions, but this is really the structure we're trading. Inverted double head. Once we break that neckline, remember, we should have broken above the 200-point moving average, and we are good for the longs. Also, the risk becomes very reduced. All right. And let's now take a look at targets. once we break the neckline, we can close the hedge if we have. And I believe we might as well close the hedge, because once we break the neckline, it's going to be too late to close the hedge and will not be in the money. Say the hedge is 98,000, I believe. Right now, market is 97,910, and looks like we're going to break higher. So we close out the hedge, hold the longs, and you can have a hedge right below leg C here. Let's take it to targets now. So take it to the hour. The most probable is, I don't think we're going to resistance 1 unless we see good positive momentum in the hourly. But that's the most probable. The next higher probability is something like 50% between resistance 1 and pivot level, which is around 103,300. The best target to take is off the 5 minutes. Let's take a look at how. So I know this is the 1 and the 2, and I'm breaking out. I think I know this is the 1 and the 2. I'm breaking out into the 3. You want to go to 423.6. 104,900. Let's have it marked. Or 105. It's today resistance 2 actually on the 5 minutes. This is the best target. Following this, 50% between 261.8 and 423.6 is also valid. Let's take it to the hourly now. So take it to 2 hours. Bounce comes, of course, at the moving average. We've always been bouncing the moving average 3 times now. All right, so this is 50% between it must have been the resistance was 30 minutes, and the 105 isn't even resistance 1 here on the 2 hours. Let's take it to 1 hour. I think we'll attempt resistance 1. Let's be realistic. 107. We'll attempt 107,200, resistance 1. On presumption that we're going to break out of this ascending triangle earlier than we anticipate. That we really are very close to the apex of that triangle, and so we should be seeing a breakout. All right, so on a trigger for Bitcoin, positive momentum on the 5 and 3 minutes, we buy market. We're going to take it to 107,000, 107,200 is showing here. The hedge is just below the double internal inverted heads on the 5 and 15 minutes. That is all. That is actually more than enough. It's 96,000, and probably by the time we have a trigger, we're going to be at 98,000. So that hedge is fine. And we're going to be taking to 107,000. If we had the long since yesterday, we had the long at around 99,800. We closed the hedge, taken the profit, have a new hedge at 96,000. Even if it's a bit wide, we can raise it if the market fails. And we were going to be taking profits earlier at 100,200 or 100,300. We're going to raise our profit target to 107,000. Again, on the projection that this is going to be the bounce out of that ascending triangle, and that we have finished high degree A, B, and C,